You're listening to the Wired for Impact podcast. All right, I'm here with Meir Velenski. Meir, thank you so much for carving some time out of your busy schedule to be with me today.
Pleasure to be here.
Yeah, I'm excited. You've got a very entertaining, educational Instagram account, and I've learned so much from following you. And you're one of those people that has such a grasp on the macro level financial markets, the geopolitics, how all of that is interplaying with each other, but then also the expertise in the vertical spaces of gold and silver, of the Forex markets, of the commercial real estate, et cetera. And so it's a real pleasure to have you on because your expertise is so critical at a time like we're in right now, because it really is wild out there. For those that don't know who you are, if you could please briefly just share a little bit about your financial background, your education, so people know what you're coming from.
Okay, so I'm 35 years in capital markets, corporate banks, capital markets at the highest level, top tier banks like Nomura and Deutsche Bank, etc. Set up my own private wealth company in the UK back in 2000. Worked on Wall Street and in Hong Kong and London as a market maker, head trader, head of trading. Worked in setting up all different types of institutional firms and retail side as well. The media, I'm not a big media person, Peter, just to be absolutely clear. And the media only started off because the frustration when I was once just looking for some information on the internet, and I just saw the biggest load of trash. I thought, wow, there's no one telling the truth, or everyone is just living this facade of this Hollywood of, like some 95-year-old woman, oh my God, you look gorgeous. Seriously, let's call a spade as a spade. And no one is doing it anywhere in the financial space.
It feels like we're in another dimension, and maybe we are, because you're right. It's so, like I've often said, there's the emperor has no clothes story. It's not the emperor doesn't have any clothes. It's like everybody's naked and everybody's going, you look amazing. You look amazing. And I'm sitting there going, is there anybody that has, and I'm a novice in this space. So it's really great to hear that from someone with your level of expertise. So first and foremost, you've been talking a lot on your channels about the banking crisis. Is a crash imminent? And if so, what does that look like? And give us a time frame.
Wow, that's a big question. Okay, so my opinion, a crash is imminent. However, there is a lot of forces in Washington and on Wall Street that are going to massage the numbers to make it out there's no banking crash. Everything's absolutely fine. There's no crisis exist, and it's a figment of our imagination. What the numbers coming out or what's being distributed in terms of the BS, excuse the language for your viewers, the BS that's being put out to you and I is they make out that we are fools. They make out that we are stupid and we simply don't know what the heck is going on. The banks themselves are the US regional banks, and that's only to name the US. There's also problems in Germany and in France with Deutsche Bank and, for example, BNP Paribas. There's also got problems. The UK slightly less because they were already bought out in 2008 by the UK government, and there's some independent banks. But in the US, the regional banks have a major problem. That major problem effectively started many years ago, but was crystallized back in 2020 with the onset of Corona. What happened in the COVID-19, Chinese flu, Corona, whatever you want to call it, pandemic, the manipulation, people believe it, not conspiracy, whatever, there was a load of money dished out by the US government, Trump at the time, and later on by Biden. We're talking about trillions. I mean, hundreds of billions, probably trillions of dollars was distributed to US families and also Western families, but let's focus on the US for the moment. Those families and those businesses, for any concocted reason, received $50,000, $78,000, $178,000, $278,000 with the employee retention scheme and the fact that you are an individual, you've got a family, and all this money had to be banked. So what did they go and do? The regular Joe public went and banked the money at the local bank. Whether it's Zions Bank or Bancorp or Third and Fifth, it doesn't really matter. They banked at the local bank, which is, if you get a check for $10,000, you go to the bank and you bank it. The bank had to do something with the money, so they parked it in T-bonds, US Treasury notes. US Treasury notes are as good as cash. So they said, you know what? let's park it in treasury notes. The money's pretty safe. We're going to get a tiny yield at the time, a return of 0.5% because interest rates were zero and the bonds were expensive. They were high. The bond price was high. Yields were low. Yields is the interest rate were low. And then that's absolutely fine until 2022. In December 21, which I stated clearly on the media, inflation is going to pick up. It's going to pick up. And then came February 22, which was the war with Russia and Ukraine, where Russia invaded Ukraine. Biden and everyone blamed Putin. Don't talk crap. Putin has nothing to do with inflation. He might have aggravated a little bit, but was already there to build up because everyone was coming out of their locked cages, no more lockdowns. And that money now at the banks would have been okay until inflation picked up. When inflation picked up, the yields on those bonds went up, the bond prices went down, and all of a sudden the net asset value of these regional banks has dropped. They might have had 100 million of value in bonds. Now they've got 75 million, 68 million. So where's that 23, 27 million gone? Multiply that by hundreds of millions of dollars spent in bonds. Then the banks now have a lower net asset value. They have a lower liquidity ratio. Then immediately, soon as there is any type of stress on an account or rumor that the bank doesn't have the money, that causes a run on the banks. The banks can only hold 15% liquid cash. Money's gone, as we saw with Silvergate, Silicon Valley, Signature, First Republic, to name but four, which other banks also got into trouble. Last week, the New York Community Bank Corp shares dropped 38% in one day when they said that they're going to cut the dividend. That's all they said. Because of struggling, we're going to cut the dividend. That was enough to send the shares down 38%. And yes, there is a bank crisis brewing. Why is there a bank crisis brewing? That's a long answer, so I apologize. Hope your audience not going to be too bored. Back in March 2023, the Fed, US Treasury, and the FDIC, the Federal Deposit Insurance Corporation, came out and they organized a congressional concession to give the banks or lend the banks $60 billion. So the regional banks borrowed $60 billion from a temporary one-year loan facility set up by the US Treasury. However, somehow, without congressional approval, that loan has ballooned to 135 billion. They don't have the money to pay it back, Peter. They've got no money. So the banks are bust. Full stop. That's my opinion. The banks are completely bust. However, the Fed's going to come in and do something to massage it and cover it up.
I forgot to mention at the beginning of this call, my intention is to get an overlay from you of what's happening in the globe. So if you're listening and this sounds daunting and a little bit scary, we're going to get into Meir's perspective on how to take advantage of this opportunity, because there is opportunity in all types of
Absolutely.
markets. So, but before we do that, would you say that the banking crisis is the biggest financial threat facing the country right now, or is there something even bigger?
Right. There's actually something even bigger than the banking crisis, and that is the US national debt. The US national debt is the amount of money that they are printing in bonds or issuing in debt in order to finance the healthcare, welfare, roads, army, military, wars in the Middle East, wars in
Interest
Ukraine,
payments.
another war, interest payments. So their interest payments alone have literally doubled, and they don't have the revenue coming in to maintain those interest payments on the bonds. Now they're supposed to be issuing 2 trillion worth of bonds this year in 2024, but based on the acceleration of rising debt from September, it's going to be more like 3.6 trillion. So the US doesn't have the money to repay the loans. Doesn't have the money, does not have the money. So what they're going to be doing, they're going to be issuing more loans to pay back. You're a bit of a Madoff to pay back
Yeah.
borrower A. So investor A wants his $10 million back. No problem. They're going to issue $10 million new debt, but the problem is they're issuing it at 4.5%, where the old debt was paying at 0.5%. So now they've got to pay interest at 4.5% to get the buyers, which is the banks and the investors, to buy into Uncle Sam's bonds. That's the problem. So that is the biggest crisis. That one is really being massaged over.
I mean, this is mathematically insolvent. Like
Correct.
there's and there's no indication from my tiny perspective, that there's any sort of leadership that's going to lead us to safer havens. I mean, it just looks like they're
No.
doubling down on everything. So you very poetically use the term massaging. Let's talk a little bit about some of the corruption, or at the very least, the manipulation, misdirection, misinformation that is happening in the markets today. What are some of the key indicators that we ought to be looking at, and why do you think those numbers are quote unquote massaged? One, for example, that I've heard you mention often on your channel is the employment numbers. Maybe you could start with that one.
If we start, if we start with that one, we ain't going to cover any other subjects, Peter, because that is a massive subject. I'll take a
Yeah.
whole hour on its own. So if I get too boring, cut me out. Say, okay, no, 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 enough, enough, enough. All right, because it's a really heavy subject. It's quite simple. There's two numbers in the economy you want to look at: employment, employment. Now, I am naturally not a bear. I'm actually a bull. I believe in investment and driving and pushing business and manufacturing and building factories. And if the factory's employing 100 people, expand it, get more production going. However, the US, which seems to be unique, similar to a Soviet era style government, has this obsession with creating jobs. But the jobs it's creating are government jobs, healthcare, welfare jobs, and not many manufacturing jobs. In fact, if you were to travel around the States and speak to regular businessmen, not Amazon and not Tesla and not Nvidia, talk to a regular businessman, he's actually laying off people. There's more people being laid off. But what they're doing is the people that are being laid off, they are getting a 6-month payout or 8-month payout or 12-month payout. Therefore, they are not considered unemployed, and they're not considered, they're still part of the labor force. Therefore, they're employed because they're getting a paycheck or they've been paid 12 months in advance. So that number is low. Employed numbers are high. But if you were to really assess who's out of a job, in other words, what's he doing when he gets up at 6 in the morning, or every time the viewers get up 7 in the morning, where's he going to? He's going to walk his dog. He's going to the golf course. So he's non-productive. Effectively, he's unemployed. He's laid off. He's not got a job to go to. That's unemployed, but they're ignoring those numbers because he's being paid a salary, a wage, or a paycheck, whatever the case may be. They're looking at the employed numbers and they say, right, okay, Peter, you've got a job as a podcaster. You are employed. And they say, hold on, I also work at McDonald's. Really? Oh, you've got 2 jobs then. That's 2 jobs being created. You're a podcaster and you're also a McDonald's delivery guy, or dishing out the whatever they are in McDonald's, except I don't eat McDonald's, so whatever they dish out of McDonald's, you'll dish out McDonald's. Therefore, you've got 2 jobs. So one person, 2 jobs. The numbers are misleading, and there's no way a developed economy like the US, with its rising unemployment with Google and UPS and Intel and Citigroup and Amazon and Tesla, have all laid off. Snap has just laid off 500 people. Tens of thousands. Facebook's laying off. Tens of thousands are disappearing because they get a paycheck for 12 months. They're not unemployed. So real unemployment is running at 7-8%. If you were to take those numbers in, where the people have got nothing to do every day. Excuse me, if I get up in the morning, I've got nothing to do, I'm going to play tennis. For all intents and purposes, I'm unemployed. That's really how I see it. But they don't. They say, oh, you've got a little bit of investment income. You're employed. Don't worry about you. Let's focus on the McDonald's workers.
Mm.
So yes, it's all contrived.
What about inflation and those numbers?
Wow, that's a great one. Okay, so the Fed has been very lucky that inflation has come down not as a result of its policies. Interest rates have not impacted inflation. What's brought down inflation is the reduction in energy prices. Energy prices have fallen, therefore, and the supply chains increased, and goods have become more available. But it's not the Fed policy of rising interest rates. If you look at retail spending, interest rates haven't really impacted people's spending habits. They're still spending as if it's the last chance saloon down in Ohio, and they're going to spend the last penny before everything just combusts. What's interesting is that credit card defaults and delinquencies, which I mentioned today and yesterday on my Instagram, have surged. I use the word surged because no one's going to give an exact number. It's probably about 50% higher. But let's say use the word surged.
Wow.
which is what been used by CNBC and all of the financial channels. So what you've got is inflation is bubbling up. So I called the bottom of inflation in July this year. I said it's bottomed out. It's probably going to rise up. Remember, there's three types of inflation. You've got producer price index at the manufacturing level. You've got retail price inflation, which is consumer price index at what you and I spend on a box of cornflakes or raisin bran or gas and whatever. And then you've got wage inflation. Wage inflation is ticking up. So wage inflation is ticking up. Not only that, with the moving on to the geopolitical crisis in the Middle East with the Red Sea and the Houthis attacking shipping, interesting to note that not yet freight has gone up. The cost of a container has gone up from $2,000 now to $8,000. Not yet reflective in inflation. Not yet reflected in inflation. We'll be very clear. Okay. However, if that territorial dispute or conflict escalates and goes on for longer, Peter, what we're going to have is it will impact inflation because it's costing the ships more to circumvent African coast, the Peninsula of Africa, and around to the delivery. So the cost of the supply chain is going to be frustrated, and you're going to have rising costs of freight, which is going to be fed into the consumer. So we're going to see, if the war continues in the Middle East, especially with the Houthis, then we're going to see inflation rising. By the way, the US does not use, no US shipping uses the Red Sea as a conduit. China and Europe do, but the US have sent the Fifth Fleet there to fight the Houthis. Well, why is the US, why aren't China sending the fleets there? Why aren't Europe sending the fleets? Why is the US having to spend billions fighting the Houthis? Why is no one else coming to help? And yeah, that's a side point.
Well, that's an interesting question. Why do you think that is?
Wow. Okay. So as far as the US is concerned, it generally wants to take the mantle as the world's policeman. However, in this particular case, I think under someone like Trump, but it wouldn't, first of all, wouldn't have happened. Okay, it wouldn't have happened. Second of all, he would question saying, why are we paying the US? Why is the US paying hundreds of millions or tens of millions to send their ships, fire their missiles? Each a Tomahawk missile is $2 to $3 million. I think maybe even more, $100 million, something stupid. Each of the missiles they're firing at the Houthis live in caves. They live in sand. They live in sand castles. And you're firing $2 to $3 million worth of missiles, each missile, to destroy a sandcastle. The Houthis don't give a crap. They'll just keep on firing at the shipping. What they want is to sink a US ship. Now, why hasn't China sent any support services there? Because China supports Iran. Iran and China are in cahoots together, like Russia and Iran. So it's like a little axis of scratching each other's backs because China needs Iranian oil. So China doesn't want to attack the Houthis because it could be effectively attacking Iran. That's why they don't send ships. Why is America doing it? Because America doesn't want to see mayhem, and America's trying to calm down the neighborhood for the elections of 2024. That's what it's trying to do. Just let's keep everything calm. Let's not get overexcited. Let's just get through the elections, get Joe Biden into the senior White House home living scenario with his wheelchair and his forgetfulness, and let's just get through it, and everyone just keep calm. So yes, that's why I see the reason.
I was going to ask you, with this being an election year, you're talking about some significant potential financial events. Do you see something happening before the election? You mentioned the imminent crash, of course, the geopolitical volatility. Do you see something happening this year before the election?
Okay, so first of all, my answer is too long because I feel as I'm giving you a 7, 8 minute answer when you're
No, it's very
asking.
interesting. I'm very impressed at how much you're able to condense, because any one of these questions we could spend a whole podcast on. So no, these are great.
Okay, fine. Okay, so if I do, just cut me out. So I don't want to just go on and on and on. Right. The events that could happen in 2024 are split into two: geopolitical and economic. The economic one in the US, which would be the catalyst for global markets to sink, would be something like a banking crisis or a downgrade, as far as the US is concerned, by Fitch or Moody's or S&P Global, one of the rating agencies. That would push the yields sky high, and that would send the Nasdaq down. The Nasdaq, by the way, the Nasdaq's ignoring yields at the moment. The Nasdaq is off on one. Either they're snorting cocaine and invited all the whores into Wall Street because Nvidia has saved them And the semiconductor GPUs have just saved Wall Street, and that's it. They're just pushing it higher and higher and higher with no rationale. So they're heading towards the end of the cliff. What is going to be the catalyst to look at? Middle East escalating war. That is not going away. We have to be face facts. There's not going to be a dilution or a reduction in the conflict in the Middle East. So we're talking about Iran, Syria, Iraq, Lebanon, Israel, Hamas, Houthis. That's 7 jurisdictions that are at war. That's going to continue, going to escalate. Problem there, oil, supply of oil. Problem there is they could attack America's strategic assets like in Saudi Arabia. The US is tied in with Saudi Arabia. That's on the geopolitical front. On the economic front, you've got the banking crisis, you've got the potential downgrade if that was to happen by Moody's, and you've got the whole stock market is based now not on the Mega 7, but was the Mega 6. Now it's turning into the Mega 2, which is Meta and Nvidia. That's it. They're just off on one, semiconductors. That's going to save the world, and those shares are just going higher and higher and higher. And there is going to be a pop. So everyone's just driving towards the end of the cliff like a driver. Just watch the number plate in front of you. Don't worry about looking at the road ahead. As long as that number plate is moving, just keep on moving till the cars start falling off one after the other because there's no more road left. And that's what's going to happen.
Do you see that happening before the election though, or I mean, obviously we don't
Great
know.
question.
Yeah.
Great question. I would normally see it happening. Okay, so I'm going to be conservative and normally I'm dramatic. I would see an immediate 7 to 10% drop in financial markets, maybe 15%. But on that basis, the way it's looking at the moment with the Fed's obsession with answering to its bosses in the Congress is to keep the facts hidden, keep the economy bubbling along. Now, the Fed is in a serious conspiracy mode because if you remember, Peter, in November, they said they're going to reduce interest rates by minimum 3 times. Why would a Fed central bank notify stock markets in advance of economic data that they're going to reduce interest rates when they don't even know what the horizon is in terms of inflation, growth, and manufacturing? But they seem to know that if we can reduce them because we are going to manipulate the unemployment figures, we're going to manipulate inflation. Very suspicious. I've never seen a central bank do that.
Yeah, that's that leads me to a question that I was going to ask you maybe a little bit later, but this might be a good time to ask you, which is there's a theory that there is central banking interest on a global scale that is manipulating geopolitics for its own gain. Do you subscribe to that theory? And what evidence do you have to agree or disagree with that?
Okay, I want to start off on the simplest one, which is Putin and Ukraine. People, I'm not a massive Putin fan, so it might come over I'm a Putin fan. I just want to be very clear. The man is no fool. He invaded Ukraine because NATO was going to make Ukraine, or Ukraine applied to be a member of NATO, which means a nuclear launching site would be on the border of Russia. Well, if nuclear launching sites from the border of Mexico, but there's no border there, but if there was a border with Mexico, then I'm sure the US would do something to counteract it. Therefore, Putin, from his perspective, had to take action to stop nuclear missiles being in Russia. Now let's look geopolitically. Is it in the US interest to fire up? I don't think so. I think there is a cultural war going on between radical Islam or Islamic countries that want to move their culture over to the West. I don't think America wants to create wars. I don't buy into that conspiracy or into that theory. I could be wrong, but I just don't see it. However, there are many Republicans and Democrats where war is favorable for the defense industry, for their particular businesses, for the expansion. So there is an understanding that that theory does have weight. However, unless I'm being naive, I think it's a bit stretched.
You mentioned earlier that the Fed was going to answer to their bosses in Congress, and in my mind, it was like it feels like it's the other way around, where Congress is answering to the Fed and the central banking interests. And I wonder if it's possible that they're. I have the luxury of being ignorant, and so I can just throw out these ideas, and just like, oh, this is what's happening. I don't necessarily have the expertise or the technical background to point to all the evidence, but I do follow certain people that have that greater expertise. One of the things that they've suggested is that it's not just for financial gain, but it's also for political power, and that the US is using the Ukraine as a massive laundering central location, and that the Ukraine is a linchpin in that. And so that there's other, point being is that there's other interests just beyond regional power militarily or even financial interests. There perhaps is other wild corruption and criminality that's happening in that area, and therefore they are, because this is where my mind goes, is it doesn't make sense to me why they continue to pour billions and billions and billions of dollars into that region when you have literal homelessness happening here at home. You've got a border invasion that's happening. I mean, there's so many things that are counterintuitive to an American national interest, and
Mm.
yet they are so keen on making sure that that narrative that Putin's bad, that he's going to take over the world. If we don't stop him, this is going to be the end. If, there's a heightened sense of dramatization around it, which leads me to believe, because I've started to really tune into the media manipulation and seeing where they say one thing but do another thing, and they contradict themselves all the time. And it's like, okay, there's something else going on here. So I look at things like that and I'm like, man, I don't want to be that guy that thinks that, maybe there's some nefarious intent here that is really, really, really quite obviously evil. But it's hard to not draw that conclusion because these questions, they don't seem logical. It seems like there's something
Right.
else going on.
Okay, so
Anyway,
as far as Russia and Ukraine's concerned, it's actually very sad that these Russians and Ukrainians are just cannon fodder for the politicians. That's all they
100%.
are. There's no need for this war. This war could have stopped already a year ago. There's no need for it. It's a complete and utter waste of time. Nothing's been achieved. Russia's not going to win. Ukraine's not going to win. They're just destroying the countries themselves. And the young men of Ukraine and Russia are being slaughtered like the 1914-18 Great War for zero benefit to anyone. So there is definitely a political motivation there because there's no logic to it. Not only
Mhm.
that, there's no logic that America is saying we're going to defend Ukraine and we're going to look after Ukraine. They don't need to. They don't need to send the billions of dollars of
Yeah.
weapons. And they just need to say, listen, if, again, it's the leadership. The leadership's weak. So Biden himself has not got any ability whatsoever to stop a fly buzzing around his room. Okay. So he's not going to stop two powers going to war. He doesn't know where he's at. He's confused. And therefore, a strong leader has allowed this to happen. But America should not be pumping billions into the Ukraine. Full stop. Now, also, they have to remember that the US released hundreds of billions to Iran just recently, just last year. They unfroze all of the assets to encourage them to come to some fake nuclear agreement that they're never going to keep in any case. Iran's going to
Mhm.
build a nuclear bomb as fast as possible and launch it in the direction of Israel or America if they can get the distance right. Okay, that's it. So there's no need for America to be involved. Is there political? I do believe there's probably a lot of dirty politics going on behind the scenes.
Mhm.
And the best way to distract the public is war. If
Exactly.
you talk about war, public don't have any, the platform that they're going to talk about in the news is Ukraine and Russia and the Middle East. Distract the public. The real problems are in the economy. If he just buckled down and said, right, let's block that bloody wall in Mexico instead of importing 5,000 Democrat voters per day so he could get in 2024, and if they stopped the immigration and had a bit more wherewithal, you said there's homeless. Why is there homeless in the richest country in the world? There shouldn't be no homeless, but all the resources going into giving the immigrants and illegal immigrants, the whole thing is so corrupt as a macro corruption. Whether
Mhm.
they're going to say, is this guy corrupt, that guy corrupt, I don't know. That could go down to the minuscule, let's have a discussion. But at the moment, it's all corrupt.
You bring up such a valid point, in my opinion, that these wars are distractions from fundamental economics. My mind goes to the life cycle of a fiat currency, and that it certainly seems like the US dollar is showing all the signs of last stages of its life cycle. And yet at the same time, there's really no other flight to safety. Where are you going to go with that? I mean, obviously we've got gold and silver to some degree, and then we have this whole new crypto asset class. And so there's money, but we're just, it's the tip of the iceberg right now. It's not established. It's too speculative for a lot of people. It's not regulated. So this certainly feels like we're at the last stages of a fiat currency life cycle of the US dollar. They're creating volatility and wars in other parts of the world. We've seen this with every other global currency transition. There's been wars that have coupled every single one of these. On some degree, there's probably fighting for positioning to see old guard versus new guard and who's going to be the next world power and who's going to have the next global currency product. Um, I apologize because I don't know this. Are you in the crypto space? Do you have
Yeah.
expertise there? What do you think is happening there? Are we heading into a blockchain future? That seems like they're building the infrastructure for that.
Right. So I think, first of all, I think crypto is a great space. I'm a big fan. If crypto can replace the US dollar and in its anonymity, whereby if I give you $5, no one knows that transaction apart from me and you. And that has always been an element of discretion and confidentiality. I now give you $1,000. Why should the whole world get involved in knowing that transaction?
Right.
Why do I have to go to my bank and transfer $1,000 to Peter when I could really just give you $1,000 in cash? They want the transactions to monitor exactly what you're doing. They call it anti-money laundering. That was brought in by Barack Obama. It's trash. There's no reason for anti-money laundering. Believe you me, there's nothing better to oil the system than cash. I'm not talking about money laundering. I'm talking about cash.
Right.
Cash oils the system. The system has to be oiled. And that allows the flow of money. When the flow of money is not easy, then the system becomes cranky. What I love about crypto, and this is something as long as the governments and the authorities don't wreck it, crypto allows peer-to-peer transfers, peer-to-peer payments, allows the anonymity and the speed of the transaction within seconds, and you can use it and has a supported value by demand. It doesn't have intrinsic value. I repeat that. No intrinsic value. Gold has intrinsic value, but there's no intrinsic value with cryptos. However, I would love to see crypto as a parallel or alternative option for payments globally. So if I'm going to buy some furniture in a shop, I would like to then send my Bitcoin or Ethereum over to the merchant. I want to go back on one particular point, Peter. We're talking about non-stop about the value of the currency, the fiat currency. The dollar's been devalued for the last 100 years. So it's just going down and down and down, and it's going on the track where it's going to be eventually low value. I wouldn't say worthless; it's going to be very low value. But what does a person want in life? Let's talk about simple. They want shelter, they want food, and they want warmth. That's all from the outside elements. If you give those three basic things to a person, he's fine. It doesn't need all the bitcoins, the cryptos, and the massive tower blocks in Manhattan in a Miami villa on the beach. So the society has got a little bit ahead of itself by wanting these Lamborghinis and Porsches and one thing and another. That's just natural desire, that materialism we want to grow. But really, cryptos have to be effectively used whereby it's an alternative to the dollar. I'm not sure the governments are going to allow that to happen, but I'm a big fan of crypto. It used to be. I didn't used to be. I had faith in the US government, I had faith in the UK government, but fortunately, my faith has been withered away, especially with the cost of housing and just free for all immigrants that come from all over the world, that are often terrorists and gangs and criminals, and they're getting social benefits and thinking, why am I paying this tax? Why am I paying 40, 50% tax? So I can give a house to some criminal who's going to plant a bomb or go and stab or rape some girls in Germany or whatever the case may be. Enough. And that's the problem. The problem started in the 1990s, not now. When the minute there was the glasnost and perestroika, the breaking down of the borders in Eastern Europe, and the Eastern Europeans moved over, and then the US and the UK and the Europeans allowed Middle East and North Africa, which is different culture, different mentality, not Western mentality. And I want to retract something, by the way. It's not a slur on the Eastern Europeans. They are great hard workers. You take Polish, you Hungarian, the Russians, they are hard workers. They are tough. They're willing. They're part of the culture. They want to build their families. But when you're bringing in cultures that want to destroy, and just think, oh, they are thinking the same as us. They're not thinking the same as us. A Westerner does not think the same as a Middle Easterner. It doesn't
Hmm.
happen. They're
Hmm.
two separate, and that's one of the failings. Anyhow,
I think on that note, just really quickly, that there's a difference between different cultures and one that is a bigoted, maybe racist perspective. I think it's
Mhm.
I think reasonable people can say, "Hey, look, just the clash of these cultures is an issue in and of itself enough that we ought to bring some level of care and concern about this. We're importing, millions of immigrants. Common sense would say, look, these are all, at least here in America, we're being invaded by millions of military aged men. These are not families coming across the border. This is not women and children right now anymore. And they're being paid. Like there's literal documented evidence of these people being paid by the UN. They have cards, debit cards, I think from China and other things. They're flooding in from all over the world. There's a very obvious, what's the word I'm looking for? Orchestrated
Population movement. Yeah, orchestrated
intent.
population movement. Mm.
So this is not a racial or bigoted perspective. This is just common sense saying, hey, look, if we're going to invite all these people in, let's do it, the right way. Have them come in through the front door. Let's introduce them into society. But no, they're being bussed all over the country. They're being hidden. They're being put into these apartment complexes. I just saw a video yesterday. It was heartbreaking. There's a homeless man who works 40 hours a week, and he's yelling at these cops who are guarding this. I don't know if it's a hotel or an apartment complex or whatever, that they've put a ton of immigrants in, and this poor guy is out there working his ass off, and he's homeless, and he's like,
Mm.
I'm American. I was born here. Anyway,
It's
that's a whole
crazy.
separate
It's
issue.
crazy. The whole thing's distorted. The whole thing's that is a separate podcast, but the system is distorted. It's
Yeah.
distorted.
Well, and intentionally being destroyed. And so the financial perspective that you bring to it is so key, because a lot of this data is measurable, it's trackable. We're able to see that they are not lining up. Let's go back to crypto for a second. What are some of the assets that you like? What's your strategy for this coming crypto bull run?
Right. So I can see, I hope you're sitting down, you're standing up.
No,
So
I'm
I see
sitting.
Bitcoin going to 100,000 in
Okay.
2024, pulling back on profit taking, and then going above 100,000 in 2025.
Okay.
And once it goes above 100,000, it's going to go to 150, 180, 200. Bitcoin is terrific. Love it. You've got Ethereum, which is also a great platform for being used because of its clearing system. And you've got XRP. Now, XRP, I've mentioned that I like XRP, and then on Instagram, I got a load of pushback. It's trash. It's a waste of time. It's just the whole of crypto is binary. It's either up or it's down. There's no fundamentals to crypto. I can't go on Instagram every day and say, wow, so we're going to look at now the inflation and interest and the impact on what's going to have on Bitcoin. It's irrelevant. It's got no fundamentals to it. It got up. There's no profit ratio. There's no PE ratio. There's nothing. So it's a very black and white, up or down. However, because of this, especially Bitcoin, and because it is the flagship of the crypto industry and the blockchain setup, I think you're going to have a greater and greater growing interest from Joe Public in cryptos. There's very few people now that don't even have not heard of crypto. Very few people have not heard of it. And a lot of people, I won't say most, but a lot of people are invested, trading, or using it as an alternative asset. So in
Mhm.
2024, I see it as a great year. However, there's always got to be a warning. If there is a market fallout of 30, 40%, and we could be talking about stagflation of the 1970s, which is a huge topic in itself based on the Fed cutting interest rates too early, but if there is a fallout in financial markets, then the crypto sector will fall out with the investment. It's not immune. It's not an alternative. It's not a safe haven. It's not. If I talk about safe havens, I want to be absolutely clear. Safe havens are at the moment US dollar, US Treasury, and gold. If there is an economic crisis of a recession, gold will fall because gold is used as a metal in many, many, many products. And therefore, if there's a recession, then the demand for gold will fall, and therefore gold price will fall. If there's a crisis, then gold will go up. The dollar will go up because there'll be the rush to the greenback, and the dollar is still considered a reserve currency and will be considered reserve currency for years to come. So the dollar will shoot up, and US treasuries will also be sought after. Uh, BTC, Bitcoin, and cryptos will not be sought after because the volatility and the lack of fundamentals will mean they're high risk and people will dump them and the price will drop if there is an economic crisis or a market fall.
It's so confusing because on the one hand, there's clear signs of inflation, possibly even hyperinflation, and yet on the other hand, oh, maybe it's the flight to safety, and
That's
it's
right.
it's like
It's very confusing. It's very
it's
confusing. It's very confusing. I agree with you 100%. And it takes, that's where fundamentals comes in, Peter, because a lot of traders, I don't know if your audience are traders or just general people looking to seek reviews, but as far as trading is concerned on that particular point, most traders, retail traders are technical, but they
Mhm.
don't understand fundamentals. They don't understand what is driving markets, what is really the factor, the catalyst behind that particular instrument or asset moving. So that's
Mhm.
where I come in. I'm a fundamental investor trader.
What advantages do you feel that a fundamental perspective has for those that are my audience is not a financial trading audience per se. I mean, I'm sure there are some traders in the audience, but for those that are more John Q public, technical trading is really where you're looking at the charts, you're looking at patterns, you're looking at, taking opportunities based on certain pattern setups. Fundamental is really more looking at the primary fundamental driving forces behind markets as a fundamental trader. Do you have an advantage over a technical trader?
Yeah, okay. I don't have an advantage, but I have knowledge. And knowledge is power. When you can look at a number and you can say, right, the number is true, not true, high, low, and what impact it's going to have on markets, then that puts you in a position or decision-making decision where you're ahead of the crowd. And most people can't connect the information coming from Bloomberg, CNBC, I don't know, from the government. They say, okay, inflation's up. I'm still going to get an Uber taxi. I'm still going to eat. How does it affect me? And then when you translate that number into how it's going to affect you on a daily basis or weekly, monthly basis, then that's understanding fundamentals. So I like to understand what is behind the numbers. And so do a lot of people also want to understand, but they don't know where to look. They just don't know where to get the information from or how to
Hmm.
connect the dots.
Hmm. Can you give your perspective on what you would do, what you recommend others to do, given all the volatility and all the craziness that we've just barely touched on, but done a good job on in this conversation alone? What
Right.
what can people do? Where are the
Right.
opportunities?
Seek advice. Seek a mentor. Seek someone that you feel as though can help you, guide you through this potential storm that's coming up. Don't panic. Whatever you do, do not panic. Real estate is great, by the way, but don't panic. And probably looking at investments that are going to protect your cash over the coming year and a half, or then iterate it. We are at the end of an economic growth. Since 2010, when quantitative easing and the Fed just printed hundreds of billions, and zero interest rates, zero inflation, that produced economic growth. We're now at the end of that economic growth cycle. It's at the end. We're not going to go through another 10 years of economic growth. It doesn't matter how hard the Fed tries. So I would suggest that you seek advice, seek information, wherever you can get the information from. Get a mentor if you want to get a mentor, or just get whatever the case may be. But you've got to choose your assets and your investments carefully because you don't want to risk too much where you could end up lose a lot of money. Personally, and be looking to go short of the market, which means you're selling the market, hopefully to buy it back a bit at a cheaper price. If you don't understand what that is, then the movie called The Big Short, watch it, and that'll give you some guidance.
Oh, I watched it again. It's one of my favorite movies. I watched it again not too long ago, and I cannot watch that movie and sit the whole time because I'm just sitting there going, pulling my hair out, going, how nobody went to jail. Not one person
Nobody
went
went
to
to
jail.
jail.
The
Nobody went to jail.
it's just,
It's
I mean,
incredible.
and to me that exposes the
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 corruption.
invalidity of the whole thing. Yeah. One of the
Absolutely.
best parts of that whole movie was when, at the very end, for those that don't know, what's his name again? Michael
Mike Berry. Mike Berry.
Burry. He sees the fraud, he shorts the market, He's in position to win. He thinks he's ready, but then the market continues to grow, and he's going, "What's going on? This is the fraud." And at the very end, Steve Carell's character goes to the Moody, not Moody, was it Moody's? The Moody's uh,
S&P, S&P,
was it S&P?
S&P, Standard and
And
Poor's, yeah,
yeah, and
rating
he's
agency.
he's like, how come nobody's going to jail? And she like looks at him and she's like, dude, if we didn't give them an A rating, somebody else would
That's
have. Like,
right.
in other words, it's
That's
all
right.
fraud. It's all fraud. Anyway,
Absolutely.
so you bring up such a great point with mentorship. The two key things that I continue to hear from people that are seasoned investors is certainly mentorship, but also the emotional fortitude, because what we're heading into is incredibly volatile and we are emotional beings. And if you don't have that guidance and that mentorship, you're going to get sucked into the hysteria of either opportunity, endless opportunity, or, oh no, the whole sky is falling. The other thing too for the average person is they don't know how to make money when markets go down, like you were
That's
just
right.
talking about, shorting the market, and there's other strategies, of course. So you provide mentorship, and one of the things that I recommend people following your Instagram channel, if nothing else, and the Instagram channel is at Driving Markets. That alone will start to get people educated on some of the macro level things, the fundamental things that I think they ought to be aware of if they're looking to maintain, if not grow their personal wealth. But you do offer mentorship. Can you give us a little brief overview of what that mentorship looks like?
Yeah. So before mentorship, I've actually written some books on Amazon regarding financial markets, how to build a business. I'm writing another one now on how to be a successful trader or maverick trader, etc. That's specific for people who want to look at financial markets. As far as mentorship is concerned, mentorship splits into two parts. There's the business side and there's the trading side. Not everyone requires trading mentorship. Some people regard mentorship regarding business, what to do in that business, what to do with the staff. Should I hire? Should I fire? Am I growing? Should I enter this venture? How do I turn a loss into a profit? What do I do to resource cheaper? So that's business. On the trading mentorship, and they're all one-to-ones. All the mentorship programs are one-to-one. On the trading mentorship, then that is a specific body of people I've built up, which is again one-to-one. But we have six analysts on the program: Wall Street, London, Hong Kong, top analysts, which the public can't get access to under normal circumstances. And they've got me. Obviously, I lead the group. Then there's a community. We build a community that interact. We have Zoom calls, a lot of messages, a lot of updates. Text messages are sent direct, and we answer the text messages very, very quickly. There's a course being run in March the 1st to the 3rd in London. So anyone who's outside London, they can either fly in or they can go on the online course if they want. But there's a whole array of programs. The idea is to set up something to help you. Now, if you go make $1 million from the program, I'm over the moon. I'd be so happy. And that's the idea. The idea was I set up Instagram as a non-business just to help people. But unfortunately, one of the things people want, oh, can you help me? Can you help me? So there has to be a bit of a business relationship. So I said, okay, no problem, I'll help you, but there's got to be a transaction somewhere.
Mhm.
Otherwise, it just becomes, it's got no value to, no basis to it. When there's physical transaction between two people, then it's your skin's in the game, your skin in the game as such. So that's the idea. So anyone, and also people don't want mentorship and they just want to DM me and get answers, no problem. Absolutely. Answer them for
Mm.
free.
Mm. That's very kind of you. What does the
Yeah.
programs run? How much do they
And
cost?
right. So, okay. So in terms of dollars, it's about $350 to $500, depending on which part you go into. There is a very high level that is very expensive. That's when it's over $1,000, but the average 350 to 500 depends on which program you want and what type of application, how many one-to-ones, etc.
Is that per month then?
Yes, per month. Yeah,
Okay.
it's per month.
That's very reasonable when you consider the insanity that we're continuing to experience and the expertise that we're needing. So amazing. Well, thank you so much for that. For those that are interested in that mentorship, where can they find you? Where should they go?
Generally, just on Instagram, they search out either Meir Velenski or at Driving Markets and just DM me. And more often than not, they don't necessarily need mentorship. They can just have a quick question and answer them. But if it's something where they want a bit more input, then they might need the mentorship program. So I don't push them in any direction. I let them make the decision.
For those that are listening, if you don't take advantage of this offer, there's not many people with Mir's expertise and macro perspective with intimate knowledge fundamentally. Like that's just a no-brainer as far as I'm concerned. So anyway, Mir, thank you so much for sharing your wisdom
Pleasure.
today and your expertise. I know we covered a lot of things. We didn't really get into gold and silver that I wanted to. I have talked about that on other podcasts, so we're going to let that one go for now, but love to
Cheers.
have you back on at some point and
Thanks a
get
lot.
a
Thanks
touch
for
base.
having me. Thanks a
Thank
lot.
you.
All the best. Bye-bye.
Take care. Thank you for listening to this episode of Wired for Impact. If you're interested in creating and expanding your impact, be sure to visit us online at impactnow.com.